Good evening, ladies and gentlemen. Today is the 12th of March and it's a Friday. We came off a holiday yesterday of Mahashivratri. First of all, wish you all a very happy Mahashivratri. I hope you had a great time with your family. Everyone's consensus and expectation after looking at international markets yesterday and SGX Nifty yesterday was that we're going to open at 15,400 and whatnot. We were in for a surprise where we opened below what the expectation was and continued to see a slow cascade from there, and at which point we broke down, essentially had almost 400 points in today's range. And regardless of which side you were trading, it would have been very difficult to manage a day like this. That being said, my day was not so good. At the end of the day, closed at break even, more or less. Just lost a few points, half a point to slippage. But apart from that, managed to exit the day without taking any damage. And on a day like this, that is a good enough outcome. So that being said, I think there's a lot more that you'll learn from today's video than any of the other videos, because this is essentially what you do when you have to fight against the market and you have the worst possible trade to manage in a market that's going against you. So also I will be traveling. I'm not going to be trading on Monday. I'm traveling and I will be back on Monday. So next trading day will be on Tuesday. And in the meantime, I've recorded by answering some of your frequently asked questions, which will be put up either later today or tomorrow. Have a great evening, and I hope you manage your trade all right today. Take care. Good morning, ladies and gentlemen. The time, as is visible now, here is 9:41, and I was adding a clock to the recording software, which is why I couldn't record the first part. But basically, in the opening, we entered our position roughly at around 9:15, 9:17, because we wanted to we were expecting a gap up and a further up move, but that didn't exactly work out, which is fine. So we are now sitting on the 15,000 and 15,600 strangle, which is basically equidistant now currently from the spot. Now, what is the idea behind the trade is that 2 days in a row, US markets have been on fire. Bond yields are starting to stabilize. Yesterday, US 10-year did go up slightly. They're more or less stable at around that 1.53 on the 10-year. Currently, the hypothesis that we're working with is that Wednesday's highs should hold. And in fact, we should not see more than a 50-point dip from where we are currently. The reason for that is many people who are long will obviously unwind their positions on a gap up. At the same time, the reason the movement down will not continue is because a lot of people who are on the short side, people who have shorted from the 15,000 level, will start to use that dip as an opportunity to buy back, which is why you will find that there will be demand, because the guys who have previously gone short will now try to cover their shots on dips, try and exit, since the sentiment is changing. Same thing goes with Bank Nifty, and basically the gap up was not as big as what one was expecting or what SGX Nifty was indicating. And currently we're not seeing any big trend. We're seeing Reliance back to 2,200, and we are now just taking a look at all the other sectors. So yeah, gap up and mostly sideways or getting sold into slightly. So the hypothesis that we're working is the sell-off is not going to continue. If we do see 15,250, then we're going to adjust by moving our calls down a single strike. And if we start testing Wednesday's lows, then we'll have to take slightly more corrective action in terms of managing from the put side, either moving them away or buying an inside hedge. So far, nothing after the gap up. We've just gapped up and seen a slight dip, the slightest fall, and options prices have just slightly corrected for that. So today being a Friday, we should capture a good amount of decay during the day. So I'll keep you posted. The time is 9:45. Okay, we're not seeing much movement from where we've gapped up to, and the dip is also has not gotten bought in the first almost 45 minutes of trading. So we've moved down our calls then to take in additional credit and balance our trade better. So at this point of time, we are now sitting on this particular trade. Time is almost 11 o'clock and we're not seeing much movement, very sideways, just holding below 15,300. The puts expanded a little bit to 61.62, so we added to our position at that point of time because we continue to hold the conviction. So kind of like a buy on dip situation, we added to our position slightly. Okay, just taking a look at what's happening on the open interest front. We're seeing a good amount of put writing now happening at 15,300, 15,250, 15,200. So, and calls being written at 15,300. Not a lot of unwinding on the weeklies, but same time we look at the monthly, a lot of 15,000 call unwinding happening at. So that being the case, and also put writing at 15,300 on the monthly. Similarly, Bank Nifty, we're seeing that a lot of call writing picked up at 37,000. People have used the gap up as an opportunity, and some strength on the put side, but not particularly too much. In the monthly, 36,000 calls being unwound. So the idea is we might not be making up move exactly this week, but definitely this month we might see higher levels being taken out. 37,000 calls being written once again. So what is the idea? So Bank Nifty obviously is slowly making lower high, lower low pattern. The idea is Bank Nifty should take support here. 36,000 Bank Nifty should hold. That is quite certain in given the current situation. And basically why that will happen is once it comes to 36,000, people who have shorted at 36,000 will be like, boss, I got a good price, let me get out. Good enough. And we might not even go to that, but slowly as this heads lower and lower, more and more people who have shorted and saw all the crazy up moves yesterday and day before in all the other markets would be like, okay, this is good enough, let me get out, let me cover it here. So that is what will happen. That is how price action generally works. It's all psychology of people. So we continue to hold our position. Given that there's absolutely nothing happening, we should be able to expect a good maybe 15 points of decay towards the end of the day if we hold the range. We start breaking down, then we'll have to take actions with our calls and all of that. We'll wait and see if there is a necessity for that. Okay, so now we're seeing that some buying is happening towards 15,250, and what we have done is we have moved down about 40% of our calls, taken more call side credit in case we saw the dip which was trending downwards basically continue to go. We didn't know at which point it gets bought back. That's why we moved down roughly at around 11:20. We moved down some of our calls, and we continue to hold this position exactly where it is. It's quite well balanced. If you take the average between our two strikes of calls sold, it will show you that our delta is very close to neutral from this point of time, which is how we like our trade to be. So far, not much happening in the day. Okay, just the plan now is if we head back above 15,300 and hold there for 10 minutes, then we will move these calls back up to 15,550. So it all depends now if we continue to move up or we stay here. If we stay here, then we hold the exact same position. Okay, so time is almost 11 o'clock. Our trade remains exactly the same. Right now, market is being very stale. So we'll continue to hold. We're targeting about 10 to 15 points of decay for today. Okay, time is 12 o'clock. Not much is happening. Reliance dipped from the day's high and is trading at 2175, consolidating. Bank Nifty as well at 36,200, and yeah, I think at somewhere near 36,000 worst case there should be buying. So dip towards 36,000 on Bank Nifty's buying opportunity. And meanwhile, our position continues to remain quite well balanced, but definitely slightly on the bullish side. We will look at and consider moving down the rest of our calls if we start testing 15,250 on the downsides. We start testing 250 and it's a clear breach, and we'll move the rest of our calls down. Apart from that, for now, a very boring day. No changes in global cues as well, and we continue to hold. It's already 12 o'clock and we haven't seen much decay. Yes, we've been a little bit messed by the move on the downside, but yeah, that's more or less covered by our calls. Okay, we saw a downtick on Bank Nifty, which really crashed the prices of the 15,550 call and of the partly of the 15,500 call. What we did was we then booked that call and then we moved it lower. Interestingly, the put has not gone up in price at all. So, despite the downtake, the demand for these puts has not rocketed or anything, which just shows you that people believe that the dip will get bought. But these calls crashing is indicative of how in the morning people were expecting big up move. Some people were expecting a 15,400 opening, or after the open that we would continue to run, or after a slight dip that we would eventually get bought. None of those things happened. So, which is why everyone who went long on those calls literally started to dump, which is why they went down in price. Whereas the guys who had purchased or sold the puts, they don't see their risk reward improving anyway by this down move to 15,250, which is why the puts have not moved and the calls have crashed. Like if you remember, these were trading at 57 and these were trading at 57 as well. In the down move, these have expanded to 60 and these have fallen all the way to 51. So that's good for us. And right now we will see if we now start heading towards 15,200, which is very unlikely. I mean, 15,200 should be the absolute down ceiling. If 15,200 starts breaking, then we're going to get out of this put side and manage it slightly differently. Anyway, our calls have anyway been rolled down to account for that move. Okay, so we continue to dip and now we're convincingly above 15 to 50. Now, what is our idea? Obviously, our puts are going to now start expanding. They won't stay forever. The calls are also compensating for that. The idea will be if we continue to see a dip towards 15,200 and we test 15,200, then this 15,000 put will be squared off and move to 15,950. So we will, by then, this 15,950 put would have expanded quite a bit. So we will be doing a little risk off on the put side if the dip doesn't get bought before 15,200. As long as dip gets bought before 15,200, we're very comfortable. In case it doesn't, then we stop being comfortable and we take some of the risk off. We don't want to move this call down. So now will be more of a time to risk off rather than taking additional credit on the call side. We're just taking a look at what is causing this drag. Well, Reliance is definitely getting smashed. Nifty Auto as well. Today quite weak. Financial services, FMCG sideways more or less, but in basically everything dipped when we dipped below 15 to 50. And Bank Nifty is at 36,000. I think it's a great, like it's a good time to buy the Bank Nifty. Probably create a bull put spread or a bull call spread or something like that if that's the kind of trades you take. But it's a good point to take a trade such as that. We are continuing to see that this dip is not yet bought, which is why the puts are now starting to expand, which can be a problem for us. So now the calls have stopped decaying and just the puts are expanding. So we're going to have to be watchful of some kind of a breakdown from here and try to get out of the put side quickly, because the reason these calls are not going down now in price is because people feel that at this point there's a high chance for this dip to get bought, so these calls will not compensate. But the fear is also going up because we're constantly trending down and now Reliance breaking down below 2170 and could lose another 20 points from here. So that being the case, that's the reason for this expansion. We'll wait. So we have a criteria. The criteria is that we must test 15,200 on the spot. And if and when that happens, we will move away with our puts. Until then, we don't need to be in an urgency to get out of it. We're just shifting our put down now because we don't want to wait till the test of 15,200 and then kind of get exposed to that kind of breakdown risk where 10 15 points will be added to this put in no time. So we're just moving it down. Our position will continue to remain bullish, but this kind of evens out the risk. I mean, obviously our put side is still trading more expensive than our call side. So we've done a little risk off on the put side. So these calls are not particularly decaying, and we're seeing a spike in the IV on the put side, which is why puts are expanding without calls really going down. And we're still holding above 15,200, but at the same time, we have done a little risk off on the put side because we don't want to be exposed to this expanding to 70, 75, 80. And this call will not compensate for it at all at that point of time because this call has already come down quite a bit. And yeah, because of the IV spike, the put expansion will be purely due to fear going up on the put side. Basically, the assumed risk reward going up on the put side. So that's fine. We will continue to now see if 15,200 is really tested and see if we have to move further away, even further away on the put side. We'll keep you posted. Also, just for context, right? One more reason why we did that is because while we expect Bank Nifty to get bought at 36,000, everybody probably does as well, which is why we might see today at least a dip below 36,000 and then a pullback from there. Reliance is also weak, IT is also weak. Generally, everything is looking weak. There is selling in everything. There is no sector that is particularly strong. They're selling in mid caps as well. So that being the case, why have direction? We're on a Friday. Friday should give us good theta decay. We should capture good amount of points doing that. Let us not spoil that by having excess money on our view being right. Okay, the put continues to expand without the call particularly doing anything, but we have sort of halted at 15,200 for now. We're halted, and Bank Nifty is exactly just 20 points above 36,000. Taking a look at some of the open interest. Currently, you're seeing heavy call rating at 15,500, 15,300, 15,600, 15,400. These calls are being written, and some amount of put unwinding in the last half an hour at 15,200, which is why we see those puts also expanding. In the monthly, it's actually quite the opposite situation where we're seeing calls unwound and puts being written at high levels. As in the weekly, we're seeing calls slowly starting to be written higher and higher. Okay, now we have broken 15,200 and we are below 15,200. And the calls are not moving. We are going to wait for 15,200 on the downside to be held. Obviously, these have expanded because of IV spiking, which means that these have also expanded. So we're getting 55, 56 for the 14,900 put. And our plan will be to see if we hold below 15,200 for the next 15 minutes. We will then move. We don't want to move them right away and then see that the put completely deflate and these calls start to expand, because these calls have stopped deflating also. So that's the idea. We're currently down. If you see, we're down like 5 points, and yeah, that's natural. When there's an expansion of IV, it's natural that we're down 5 points, but yeah, that much we can sit on. It's not a problem. We're going to wait 15,200. If it's held and there's absolutely no sign of pullback in the next 15 minutes, we will roll down our calls. Or if we make another 20-30 point move on the downside from here, then we'll automatically get out of the put side and try to time our entry back into the 14,900. Okay, skipped recording this, but basically right now on this account, we have taken a bull call spread on the Bank Nifty. What we are going to do with this trade, it's pretty good risk reward, 1.27. We have purchased the 36,000 call and sold the 36,500 call. And our idea will be that we'll keep a stop loss on this position at 35,800. And upside, we will see what kind. And we've done this in normal because we plan to hold this position overnight. There is looking like some kind of a sell-off today, but 36,000 should act as a very good support, and we might see even a gap up. If we close below 36,000, we might see a gap up about 36,000 tomorrow. So there's a hedge trade. Our risk reward is known, right? So we know what our risk reward is, and we have a stop loss. So that's generally how debit spreads in general, rather than adjusting. My personal preference is to just set a stop loss. Whenever you're paying credit, it's best to have a stop loss logic. So if our stop loss hits, that's fine. We'll exit the trade. Otherwise, seems like a good trade. Okay, once again we are seeing a dip below 15200. The idea is if we hold below 15200 for 15 minutes or make another 25-point move from here. So head to basically 15170, which will be yesterday's closing, slightly above yesterday's closing. Then we will move our puts away further. So random things will happen now with these put prices. They are still, mind you, 250 points away. So no particularly reason to have these expand on us big time. We do have stop loss market orders in case they start rapidly expanding to get out of it. But for now, we are good to hold through this IV spike. We're not seeing some big breakdown below 15200. But let us see if it gets bought or not. If it doesn't get bought also for 15 minutes, then we will still have to risk off on the put side. They're still down less than 5 points. So we are not overly worried at this point of time. Bank Nifty dipping below 36,000, but we'll have to see if that holds. We have entered a overnight position. So we have created a bull call spread, and this is just a small contra trade that we want to take. A very well defined risk, so we will just ignore that for this point of time. Okay, so 50-point dip from 15200, and that is definitely not helping our case, that's for sure. The calls are not decaying and the puts are really expanding, so we have closed all the puts at 14950, 14900, 14850, and we have moved them to 14700. And what we're going to do now is we will move this hedge also away to 14500 and try to manage it from there. These calls will start to expand if we see a reversal. So if we hold above 15150 and we start making an up move, we'll book these calls and move them higher. Okay, we have cut out of all our short positions and now we are starting to exit. Need to modify this to market. Our hedges. So we just kept our hedges and the idea was, okay, now we'll keep this position. There seems to be some massive slide. So we don't want to be stuck on the wrong side of this. So we just kept our hedge as the main trade. Now we'll, okay, it's trying to come down. Need to exit. Okay. Yeah, our day interesting slide. We were definitely not expecting that. Could have really messed us up. But basically we lost 10 points, which is good enough considering the volatility that we saw. And yeah, losing 10 points is not a problem. I think yeah, good call to exit out of our hedges. So what we tried to do is we bought back all our short puts and then we started trailing stop losses on our long puts, which this is what hedging does. Your hedge might become your main trade if on days like this. So anyway, 10 points is something that we're willing to take. It's not particularly bad for us. We've also cut out of our stop loss on Bank Nifty obviously hit and we have cut out of that position. We will now try to see if we can take a bullish spread. We'll first try to understand what is the reason for this cascade. We'll see what the data is suggesting. If there's some news or some particular reason, if nothing at all, then we'll probably look at creating a bullish spread. At this point, we might as well get out of these hedges. The IV has expanded these quite a bit as well. So we'll see if there is a possibility to re-enter, and if so, we'll take up that trade. These days happen. Can't do anything when the entire world is super positive and we see a gap up, and from the gap up we see almost 300 points plus of downside. Okay, we're re-entering a trade which is going to have 500 points on the put side. The last 1.5 hour of decay should still be good. We'll see. Oh, I did not buy the hedge. Okay, what have we done? We've now sold the 14,500 put and the 15,600 call, and we are potentially working with the dip getting bought. So 15,050 has acted as a support, and 15,000 itself should act as a very good support. If these start expanding, we will move down the calls, and potentially if these expand all the way to 50, then we're already getting out of it. No doubt about it. So that's the idea. We will keep adding. Very, very tricky kind of a day. We had to break our trade into two separate trades and then basically be long naked puts and then trail our stop loss behind, try to get out at a good price. We had gotten out of the 14,500 put at around between 35 to 40, which was a good price. Now our strangle has a massive range, 1100 point range. And when there's random volatility like this, even if it cools off a little bit, that will add to decay because now we have the weekend coming up. The reason we are re-entering is we're only down 10 points, and that isn't particularly something we should be too worried about. So the idea is there will be a cooling off in premiums, which would have gone through the roof because of weekly options IV spiking. $750. Yeah, this can be a problem at times. Okay, so we have re-entered the trade, and currently already from re-entering the trade we have benefited close to 2 points. Too early to speak, but there is still an hour and a half left to go, a little bit more, and we have a 1100 point range. Even if there is a cool off in IV, we might easily see 8 to 10 points of decay on this spread. So that's what we are gunning for. I think today, considering the position we were in and the kind of expansion we saw in the puts, we did all right to manage the downside risk. And now the idea will be completely risk off, keep a massive range, not planning to do any adjustments. Adjustments will only be done beyond 15,200 on the upside and below 15,000 on the downside. So 100 point up and down range. One more thing to always be worried about on a day like this, and why you see most of the time dips getting super bought. Many people go out short at different points. Let's say somebody goes short here, somebody went here, somebody went here, somebody went once yesterday's high broke, then somebody went once yesterday's close broke, and then somebody went when like 15,100 broke, which was yesterday's low. Now all these are short positions, and now they see that okay, it's not going further. They'll start getting afraid that okay, now the risk reward is really bad for them, and they'll start buying back, which is why you see the V-shaped recovery. And sometimes that can propel you to a new day's high, which is why it tends to be tricky. Okay, so meanwhile, just going to take a look at some of the positional trades. Currently, today, no chance we're doing any adjustments today. There's absolutely no way. We are perfectly happy holding on to our biggest positional trade, which is Reliance, exactly the way it is. We'll see if we start breaking down below 2050 and then that we see that there's a clear sell-off, because I think this is temporary. I think this dip on Reliance will get bought, and Yeah, we're going to continue to hold it exactly as it is, no change. Looking at some of our other positional trades, Bank Nifty, we took a bull call spread, which we exited. We booked the loss on that. That's fine. It was a small contra trade. Our other Bank Nifty trade, where we are short the 35,000 call, which is an in the money call, and long the future, should be fine. This is a very long term trade. HDFC as well, covered call, absolutely no changes to be made, nothing to be done. India Bulls Housing Finance, 3 points away from our max profit zone, which is very good. And we will continue to hold as is. Similarly, IRCTC, which is at exactly our center point, we also continue to hold IRCTC. ITC, once again, covered call, absolutely nothing to do, just keep it as it is. So going into the weekend, this is more or less what the position is looking like. We're seeing now good amount of volatility. We're seeing that, okay, we went above 15,100, now rejected by 15,100 and heading back down. All kinds of stuff is happening. We are not too concerned. Our only point of change, where we make some kind of a change, will be if we start taking 15,000 out. If we take 15,000 out, we'll move down our calls. And yeah, we are seeing rise and fall by 30% to 25 to 30% in the put side with just small dips, because that's the kind of fear. People are buying and they'll come back down crashing just as soon, because people will also have stop losses. I think overall, a texture of the market, 15,000, this particular area is a good point to buy. Okay, interesting. We're seeing now again a dip towards 15,000, and our position, we have had to move down our calls again and again. We've moved it down now to 15,500. We've set stop losses on these puts. We don't want to trade if they expand to 50. So we are keeping these stop losses open. And yeah, we're also going to keep these calls open. In case the stop loss is hit, the idea will be the same thing, to trail the stop loss on our hedge. This time our hedge is really far away, so it really won't expand that much. I'm not seeing too much downside below 15,000. Too many people who could not buy will now start buying. People will use this as an opportunity. Bank Nifty as well, 35,500 will be used as an opportunity to buy. Will not, I mean, yeah, it can cascade another 200, 300 points from here easily. We have a stop loss, so we're fine. We know that there is potentially 15 points that can be taken on this, and we will gain from the call side then, and we will get from the hedge as well. So that remains. And meantime, we're just holding on to this position. We are down a little bit more than 10 points. We're down 12 points for today, and there is still 1 hour 20 minutes to go. Okay, the stop loss is quite close to hitting, but we're seeing finally that these puts have started expanding despite continued down move. We continue to move down now 30 points below 15,000. Our stop losses now are 53, 54, 55, 56, 57. So that's where our stop losses are. And each time our stop loss hits, we will be entering the 14,400 put, creating a bull put spread, and maybe even holding. Yeah, time is 2:30. We're seeing a pullback above 15,000. What we've done is, in the dip, we've purchased some shares of Maruti and Nifty base. This is not a trade. This is just adding to the portfolio. Generally, whenever there is a dip in high quality market leaders, I try to add. Today, a good dip in Maruti, and I've been meaning to buy. So, there's a Maruti and Nifty base. Now, on the other hand, what's happening with our trade? The pullback over 15,000 is now deflating these puts, which is good, and not inflating the calls because they're far enough away. They're 500 points away. We're still down. We're down for the day, but now less than 10 points, about 8 points. And 8 points is a decay that if at least 15,000 holds for the day and we're sideways around here, the decay that we'll be able to capture. One more thing that's really concerning is the dip that has happened on Reliance. Puts our position, now that it's dipped convincingly below 2150, still the volumes with which it has happened is not too concerning. I'm not going to make any changes of my Reliance position today. I will consider it on Monday. I might roll down some of the calls to 2100, but that we'll have to wait and see. No rush to do that. Okay, it's 5 minutes to 3 o'clock. We are still down about 8 points. And now last minute we're seeing once again dip below 15,000. The idea will be if these expand to 45, 46, this should be at still above 30 slightly. At that point, 45, 46, we'll start cutting our position because we won't have much time left. Last half an hour, if we don't see a big down move, then we'll see good decay, especially on the put side. So because people who have bought those options will start selling them, so there'll be more supply than there is demand, which is what will pull down the price. So we have 1, 2, 3, 4, 5 stop loss orders. I mean 5 execution orders ready to go, and we will just wait now. And more or less, I think a day like this outcome I'm quite happy with. And that's the thing about the market, right? You can't hide. These days will happen. Now what do you do on that day? You have to be able to get out properly and get out without taking damage that you can't handle. Had we held on to our initial position just saying that it's going to work, we would have been in deep trouble. This 15,000 put is trading at 173. 15,000 put, when did we exit? $15,000 put, we sold for 50. Sold it for 50, and had we just held on, just imagine what would have happened. This happens all the time. It's not like you manage to get away from it happening once and there's some greatness in that. No, that's not the case at all. This will happen, and on the day when it happens, you have to be able to fight it, manage it, else and at least know at which point you have to get out and what damage you're not willing to take. Okay, we have to make one more change. It's a big up move, big spike, 50-point candle just out of nowhere, and so we quickly got out of the calls and moved them higher in case we see some kind of short covering move. Really deflated the puts. Had we not moved down the calls, we would have worked better, but like hindsight 2020, right? Like what is this? At this point, this set together is worth how much? 56, 57? Yeah, so if this set starts going to 60 now, we're out. We've changed our orders. We made this the new order. So buy back 14,500 and 15,450, 1, 2, 3, 4, 5. Ready to get out or capture some of that last minute exiting that everyone is going to do. We have about 20 minutes till Zerodha will start auto squaring us from an MIS position. Not carrying anything. I was considering carrying a bullish spread, but that would be only if I was relatively doing worse off on the put side. Now the puts have deflated, so the premium is just not that attractive anymore, and will not be carrying anything except what I'm already carrying on the positional trades. So yeah, currently we are down a little under 5 points for the day, and let us see if we're able to get 5 points of decay. Unlikely, but if we do, then that's good enough. Okay, there's basically again a slight dip happening after that big green candle. We're not concerned at all about anything at this point of time. What we're looking at is what is this triangle trading at. It's trading below 60, we're holding the position. The moment it approaches 60, we're cutting the position. There is no other aspect to our trade anymore. We're not looking at anything. We're only looking at, has our stop loss been hit? Are we seeing a further cascade? Who knows? From 60, it might then be worth eventually 100. So that's our stop loss. That's where we get out, and that's what we're concerned about. So we continue to hold now. We're down less than 4 points. Holding is good. This becomes worth about 55, then we will at that point trail our stop loss to 58, and we just move in 2 points at each time, the lesser it starts becoming valued at. So that's the plan, and we will wait and see now what happens. For this to be worth over 60, we need to move below 15,000. Basically, more or less on the spot, you can say that is our stop loss. Okay, now this triangle is worth 54, 55. So our stop loss will be 58. So it's trading at 55. Now we moved our stop loss down to 58. This last few minutes, right? Like it's what I'm telling you about. Completely crushes the options because this is the weekend. And today there's been a spike in options prices, and especially the weekly, the IV spike. And people are like, okay, I made whatever, let me get out of it. Nobody wants to hold it. Because there's no big move on Monday, then all these OTM options which are expanded so much. Like if you see right now, this is 500 points out of the money, 450 points out of the money. They're going to be worth nothing. So nobody wants to hold on to them. So they start dumping. So that dumping is what benefits us. Okay, the time is 3:20 and looks like at this point we are break even for the day. Of course, charges will be there, so we'll have to take that into account. Another 7 minutes till we get auto squared off. Currently, this triangle is at 52, 53, 55 is our stop loss now on this triangle, more or less. Like if we start inching above 55, then we start cutting out of the position. Okay, we're seeing a slight down move now and it's expanded to 53. We are going to start cutting out of the position. So we'll take whatever we're given, no problem. Loading slippage. We will start exiting. Done. There you go. Just gotta exit the hedges now. A lot of people must be taking 15,000 iron flies overnight. So yeah, I don't intend to, because I don't know, the risk reward is not very good, and we might see again a 250 point gap up on Monday. So not particularly in the mood. Plus, I will be traveling this weekend, so I will not be trading on Monday. I will be heading out on Saturday morning and be back on Monday evening. So that being the case, yeah. Overall, for the day, we are down half a point, and that's just slippage. Like we can't do anything about half a point slippage. More or less break even for the day. Charges will be still about, let us say, about 15,000 or so. So yeah, net negative for the day, but very happy with the outcome. On a day like this, can't really expect too much to go your way. We covered entire of the expiry range by a little more than 3 times. So almost a 400 point swing today. And yeah, that's good enough. I hope you had some good takeaways from this video. I think once again, just goes to show you it's all capital management. You have to protect your capital. You need to ensure that you're not taking risk on the sideways trending, and you need to keep balancing that risk at all points of time. And you need to understand why the premiums are changing when they're changing. When is it just a surge of demand for those put options, and so on and so forth. So that being said, I wish you an amazing weekend ahead. I will see you next on Tuesday.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.